at the end of the day, Trump campaigned on a pro-growth policy. He wants to bring back industry to America. He wants to reinvigorate the military. And none of this can happen if the majority of goods produced in America or intermediate supplies are coming from China. Not to say there's anything wrong with China. It's just that the entire American industrial base depends on stuff coming out of China, whether that's refined rare earths, whether that's, supply parts, or whether that's finished products in and of themselves. And so you've seen sort of a decline in American industry starting in 1971 when Nixon took the US off of gold standard, sort of went into hyperdrive in 1994 when China devalued the yuan and started a very concerted mercantilist trade policy. And then 2000 was the coup de grace when the US allowed China to join the World Trade Organization and gave them essentially tariff-free access to the largest consumer market in the world. And China, to their credit, was very diligent and built up an industrial base that at the present moment has the highest quality goods at the lowest price. And we've seen that in the automotive industry. I saw a chart the other day. It was percentage of Chinese cars in the global sold globally, I think about 20 years ago, was 1%. Today it's 40%. If you go, and I live in Asia, and so you go around the major cities, you see the BYD cars, they're excellent. They're beautiful, they run well, and they're cheap. And so even if you have a massive tariff on a Chinese automobile, it's still the best priced car at that price point for that particular amount of quality. And so they're the country to beat. And so Trump is campaigning on, we want America to have the type of manufacturing jobs that probably people on this program or their parents or grandparents had in sort of like 1950s to, early 1980s sort of thing.
Okay, so why does that lead though to the need to do 10 trillion? Is he going to do things like the CHIPS Act where he's going to specifically pay companies to build manufacturing here in the US via tax breaks and things like that?
Yeah, so essentially US is going to copy the Chinese model, which is state sanctioned either cheap credit through the banking system or tax credits or direct subsidies. So Trump needs to make it economically feasible for an American, a European, or even a Chinese manufacturer to say, okay, instead of building my factory in China, Vietnam, Mexico, whatever, I can build it here in America. And this good is going to be price competitive with anything globally because I'm getting these massive government tax breaks or subsidies, or I'm getting extremely cheap credit. And so I wrote an essay about this, and I went through how the money moves to the banking system to basically show that what Trump was going to do was allow the US commercial banks to issue credit, which is essentially creates money. And they'll do this because it's profitable, because companies have this implicit government backstop of subsidies, tax breaks, even tariff protection. So it's exactly the same thing that Japan and China did to elevate their economies post-World War II. And so if you take a look at the amount of money that is needed just to reduce sort of the American debt to GDP down, I think I forecast something 7 or 80% from the 130 that is today. I estimate it could be in the magnitude of 10 trillion. Obviously, I don't know the exact number, but that's the direction of travel. If you think about the amount of implicit credit that needs to be created, that needs to be given to American owned factories in America to do the things that Trump wants them to do, which is make goods in America, decouple the supply chains from China.
All right. Given that they'll be using the money theoretically on productive things like manufacturing infrastructure here in the US, do you still think that it's going to have the kind of inflationary impact that $1 million Bitcoin would predict?
Absolutely. Because at the end of the day, the first amount of money that goes into doing these sorts of things is used productively. And then it gets out of hand because the companies, I'm the only one who could get cheap credit. I've done all of the things I can do to bring all the production that makes sense economically onshore into America. But because I have this special, credit arrangement with the US government and its banking system, I'm going to start going into the financial sphere. So whether it's property or it's trading stocks or it's stock buybacks. And so the credit is always misallocated. You could take a look at China. as a poster child. The credit was absorbed in a profitable way, probably from the 1990s up until, mid 2010s. But then that was the development model. They didn't know how to change from something else. The credit kept coming. The banks kept giving, state-owned companies and those who were in the approved industries credit. And what do? They bought apartments. They became, real estate developers. They were punting their stock in the stock market, and doing all these sorts of things, buying trophy assets in the United States and Europe, wineries, like, large buildings, all these sorts of things. These companies had no business doing that, but they had the cheapest credit in the world, and therefore they were going to use it. And their investors expected them to use it. And the same thing will happen in the US. The first amount of credit will be used productively, and then it'll be misallocated.
I like to think that 100K Bitcoin is the demarcation point of where any naysayers is just dead. Like that conversation is over. You've got your straggler and Peter Schiff, who's just not going to let it go. But it really seems like that argument just doesn't make sense anymore with the level of institutional adoption that we have, the height of the amount. So for it to get to $1 million, where is the capital flowing? Is it purely from people that are aware that inflation is happening? Or is this a continued cultural momentum of adopting a new asset class?
So the first thing people need to understand is that the price on the screen is the marginal price of the last trade. It's not every trade that's happened. And so it's the simple example is, how do you become a trillionaire? Well, you create some fictitious company with 1 trillion shares, and then you sell one of them to your friend for $1. Now you're a trillionaire, right? The marginal price is $1 on 1 trillion shares, therefore you're a trillionaire. So I'm not saying that there needs to be, $1 million traded every day at that Bitcoin price. I guess need $1 to trade at $1 million, and that's $1 million Bitcoin. And that informs our psychological perspective on what we think Bitcoin is worth. So with that in mind, what I'm talking about is the marginal flows into Bitcoin. Well, the supply of Bitcoin is fixed. We know 21 million will ever be produced. However, as you have people like BlackRock, Michael Saylor at MicroStrategy, longtime holders like myself and others, people who are just getting into the game now and believe in a future path of Bitcoin over the next 5, 10, 15, 20, 30 years, are they going to sell? Why would you sell Bitcoin for fiat currency if you implicitly believe that the US government and every other major government is going to increase the amount of that fiat currency ad infinitum? That's the reason why you got into Bitcoin. So as the price rises, there's less people who want to sell it. And if we have this institutional adoption through the ETFs and other sort of corporate finance vehicles, those are sticky forms of holding, which take supply out of the market, which means it's very easy to have a very exponential rise in the marginal price of Bitcoin, the last traded price of Bitcoin. And so I think that's one facet of just how a microstructure of a market works when you have a fixed supply and a holding base that doesn't want to sell it against an asset that can be infinitely debased. And then the other side, you have the United States trying to reshore industry, issuing credit. You have China has a property bust, and they want to protect their industry, and they're starting down the path of quantitative easing. They just recently announced that they're okay with allowing their currency to depreciate because they believe it's going to help them in their fight against the new Trump 2.0 tariffs. You have the European Union, statesmen like Mario Draghi and Emmanuel Macron openly saying that we need to print more money to revitalize the European industrial base. And you have Japan, which continues to run the easiest monetary policy of any major developed nation. So if you take a look at the entire world in terms of the largest 4 countries and economic blocks, they all are printing money for various different reasons. That's only going to continue. It's accelerating, in fact. And so we have a diminishing supply of freely traded Bitcoin with an expanding supply of fiat currency looking for a home. And if we believe that more people are changing their mindset to say, okay, crypto, it survived 15 years. It's going to be here for another 15, 20, 100 years, whatever. I feel okay thinking that this is going to be a store of value. I can use it to pay for things when I need. Therefore, I'm going to take 2, 3, 4, 5, 10% of my retirement income or savings and now start buying this asset. And so all these things come together, and that's what creates a marginal price of $1 million per Bitcoin.
How fast do you think we get there?
I don't know, 3 to 5 years.